All right, today we're diving into a fascinating company called Kratos Defense. Now, this is a company that's making a massive all-in bet on what the future of war looks like. And for investors, the question is pretty straightforward. Is this the next huge opportunity, or is it a dangerously overhyped stock? It's a real high-risk, high-reward story about trying to disrupt the entire world of national security.
To really get Kratos, you have to start right here with their company motto, affordability is a technology. Now, that's not just some catchy slogan they put on a poster. It's their entire engineering philosophy. It means they believe that building thousands of cheap, smart, and effective drones is way more revolutionary than building one single priceless bomber. This one idea is the engine behind their entire strategy.
So, to understand why Kratos might have a shot, we first need to zoom out and look at how the battlefield itself is going through a fundamental change. Seriously, the game has new rules, new players, it requires a completely new playbook. And the core of this whole new strategy is this shift away from having just a few super expensive, exquisite systems, like a billion-dollar bomber that you'd never want to lose. The new idea is something called attritability. And the concept is actually pretty simple. You overwhelm your enemy with sheer mass. Think thousands of cheaper, smarter, expendable drones. It's a numbers game now, and it's totally changing the rules of modern warfare.
This whole move toward attritability, it's not happening in a vacuum. It's being driven by some really powerful tailwinds. The Pentagon is pivoting its entire focus away from counterterrorism and toward competing with near-peer adversaries like China and Russia. And that means there's a huge surge in demand for the exact technologies Kratos has been pouring money into for years: autonomous systems, AI, and most importantly, the ability to produce mass. You can see it in big government programs like the Replicator Initiative and the CCA program. They're putting billions behind this new vision.
And if you want to understand just how massive this opportunity is, just look at this one program, the Collaborative Combat Aircraft. That's a $28 billion market opening up, and Kratos is right in the mix as a leading contender. This isn't just a small project, this is the future of air combat.
So, you see this huge opportunity. How is Kratos actually structured to go after it? Well, when you pop the hood on this company, you basically find two very different businesses running as one, and each one has a very different job to do. Take a look at this table. It really tells the story of the company's two engines. First, you've got Kratos Government Solutions, or KGS. This is the stable, profitable foundation of the company. It supports space missions and it makes consistent money. Then you have the Unmanned Systems division. This is the high-growth, high-stakes bet on drones like the famous Valkyrie, and it's currently losing money. So in a nutshell, the profits from the steady old business are basically bankrolling the risky venture into the new one.
And that internal setup leads us straight to the central conflict in the company's financials. It's a classic dilemma that you see in a lot of high-growth companies, and for investors, it's everything. You have this incredible top-line growth story running smack into a problem with razor-thin profitability.
I mean, on the one hand, you can't deny the market demand. Just look at this. Revenue growth isn't just strong, it's accelerating, consistently hitting these big double-digit numbers. That tells you that Kratos' vision and its products are really resonating with the Department of Defense. But here's the other side of that coin. The profitability is weak, and you can see it's actually been getting weaker. Their operating margins are getting squeezed hard by heavy spending on R&D, the costs of trying to scale up production, and inflation hitting their existing fixed-price contracts. So all that growth is coming at a pretty significant cost. And all of this leads to the one number that, frankly, matters most to any investor: free cash flow. To fund all this impressive growth, Kratos is burning through cash. We're talking over $61 million in the last year. This is literally the price they're paying to build the future.
Okay, so that brings us to the elephant in the room. The financials show a company that's investing a ton of money for a future payoff. But what price are investors paying today for that promise of tomorrow? This is where the whole bear case really gets its teeth.
I mean, just look at this. When you put Kratos next to its peers in the defense industry, the difference is absolutely staggering. It's trading at around 13 times sales and a forward PE ratio of almost 150. Compare that to a giant like Northrop Grumman at 18 times forward earnings. It's clear the market is not valuing Kratos like a traditional defense contractor. It's valuing it like a disruptive, high-growth tech company that's about to capture a massive market. So what that premium valuation really means is that there is absolutely zero room for error. Investors are paying for a future of flawless execution, and that just magnifies every single risk.
Can they actually scale production profitably? How long can they keep burning cash? And what happens when their success inevitably attracts competition from the industry giants?
So, given this powerful story on one side and the super risky valuation on the other, what should an investor actually be watching for? Well, here are the key milestones, the things that will ultimately prove whether the bulls or the bears have it right.
Okay, think of this as your investor dashboard. First and foremost, you need to see firm production contracts for the Valkyrie, not just more prototypes. Next, you have to watch if profits are actually growing along with revenue. That's the only way to prove their model works at scale. The third critical signpost is when their free cash flow finally turns positive. And finally, keep a close eye on their massive $13 billion bid pipeline to see if they can turn those bids into real large-scale wins. These are the make-or-break milestones.
So in the end, the whole investment case really boils down to this fundamental conflict. The bulls will tell you this is a company that is perfectly positioned for a generational shift in warfare, and they have a clear first-mover advantage that's already being de-risked by big contract wins. But the bears look at that same company and see an extreme valuation totally detached from today's financials, monumental risk in just trying to scale up, and looming competition from giants who are finally waking up to this new reality.
And that leaves us with the final million-dollar question, the one that really captures this whole high-stakes bet. Is Kratos truly the disruptive future of the defense industry, or is it a fantastic story stock caught up in a hype cycle that's destined to disappoint? The milestones we just went through will give us the answer, and honestly, we'll probably know one way or the other within the next 2 years.